I think putting people in the correct role to succeed, clearly defining what their scope of work is. When you just launch a company and you only have a few people, it's very difficult to have people do segmented things and delegating. But after that, after you have, 3 or 4, killers, then you can really, really scale.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Evan Rugen enjoys unlocking potential in products, people, and portfolios. Evan, welcome to the show.
Thanks for having me. Really appreciate it.
Hey, man, the pleasure's mine. Evan, there's 3 questions I ask every guest who comes on the show. In 90 seconds or less, can you tell me, where did you start, where are you now, and how did you get there?
Yeah, sure. So I moved to New York City in 2014 to walk dogs. I was 19. I had no money, no college degree, no friends. So I got a real estate license. Showed apartments for, I think, 5 months before closing a deal. I think my first transaction was $800. Started crying. I'm like, oh my God, I'm going to be in this industry for the rest of my life. All my credit cards were maxed out. I was living with elderly people on the Upper West Side, walking dogs. It was, an incredible time in my life. And at that point, I'm like, all right, real estate's my thing. So where are we now? So I run LVL Group, New York, which is a real estate syndication. We purchase off-market single-family and multifamily deals in New York and, surrounding areas, Massachusetts, Connecticut, things of that nature. We currently have about 10 million assets under management, comprising of single-family and multifamily deals. And sort of our differentiation is all the deals we buy are off-market. We've created a platform that sources off-market deals through tax liens, foreclosures, bad credit, ghost properties, tax delinquencies, anything we can do to find a problem. That's what we do. And right now we're sourcing these deals and usually purchasing them 30 to 40% below market value.
Man,
and I guess where are we headed? We want to have 100 million assets under management by 2025.
that is awesome. I love it. So are you still walking dogs?
No, I don't even have a dog. I don't even have a TV. But it was my ticket to New York City. It was my way to get here. So
I love it, man.
Opportunity. Yeah.
I love it. And that's one of the things I love about real estate is that for those who are motivated and willing, like there's unlimited potential exists out there. I mean, there's somebody that if I mention their name, probably a lot of the listeners would know who they are, that not 7 or 8 years ago, they were a gas station attendant.
Yeah. Well, it's a meritocracy. It's like, there's no political, it's directly correlated to the amount of value that you drive, which is what I fell in love with.
Absolutely. Absolutely. Give us kind of the iterations of the business. Like, how did you know where you wanted to take it? Or I guess at what point did you know you were onto something? I mean, $800 after 4 or 5 months is just not that compelling. Right. Obviously, like you said, you're maxed out on all fronts going, all right, what am I doing here? But when did you
and I didn't have any expenses. I just didn't have any money coming in.
Right.
So that was 2014. So I ran a real estate team for 5 years. I think our biggest year was 2019. We did over 550 rental transactions. I think it was like $2.5 million in revenue. And then COVID hit. And I was 25 at the time. And, I sat back and reflected. I went down to Florida for 6 months and I'm like, do I want to be renting apartments for the rest of my life? Like literally the New York Times called me the frat whisperer. I'm like, this is getting out of control. So, I had seen some friends that were sourcing off market deals. It looked pretty cool. And I always wanted to be sort of a syndicator, a person, I wanted to be on the other side of the table. I wanted to be an owner. So we started sourcing off-market deals from Florida. That's when we started building the operations, all in New York. And our first wholesale deal, our first assignment, was not for $800. It was it was an off-market 18-key vacant hotel that we got under contract for $750. It was on a lake. I called every single person that was on the lake. I called every single hotel owner within 100 miles. Some guy walked in. He's like, yeah, I like it. Bought it, put in an offer. And we did my first real estate assignment was $150,000 assignment fee in 3 weeks. I'm like, okay, this is better than renting apartments.
That's awesome.
And then he took me out to dinner. So it's a whole different level, like there's a million real estate agents. It's like, if you tell someone you're a developer, it's a completely different equation.
Right. Yeah. And that's something I've often, wondered. And there are people out there, obviously there's a right way and a wrong way to do it. And I'm not here to give legal advice on the right way to wholesale or not the right way to wholesale. But I've often wondered for brokers and people like that who are fighting over a percentage commission, where it's like, man, we ran into that. Even on some stuff we took down.
Yeah.
Gosh,
Me too.
I could wholesale this for a lot more than what a broker's commission ever would be.
Yeah, well, that's one of the things we do when we wholesale deals now. We offer them 5%, and they're jumping out of their chairs for 5%, and it's like, we're making 40%, but that's the beauty of it. And we started wholesale. I'm like, oh my gosh, the upside is relatively uncapped. If you find an insane deal, and at that point, I'm like, why don't we just start buying it? Why don't we start buying these deals instead of assigning them?
Yeah, I mean, and that's the next step, is that once you've developed, because somebody asked me that here recently. I said, hey, if you'd start over, I said, well, the first thing I'd do is go out and wholesale, develop cash, some dry powder of my own. Once I had that covered, then I would go directly back into owning.
Right.
That's the first two steps I would take. So you guys sound like you made that jump too. You said you're buying single family and multifamily right now. Finding a lot of stuff with selling got some hair on the deals. Are you finding commercial real estate? I mean, obviously you are with an 18-key vacant hotel, but are you still finding commercial real estate opportunities right now with some of the problems that you had mentioned?
Yeah. So we do a lot of interesting structuring of deals. We do a lot of subject to or mortgage assumptions, especially with the way interest rates are going. I simply say to the sellers, I'm like, look, I could buy this and get a 5.5% interest rate, or I could assume your mortgage at 3% and give you a little bit more money. What do you want? Right. And if they're rational and they can think through it, and you explain it to them, very frequently they're down with that. We do a lot of seller finance as well. But yeah, there's still a plethora of opportunity out there, and I think sort of where we're headed is not a lot of people have a lot of money right now, and I think there'll be a lot more opportunities moving forward.
Yeah, couldn't agree with that more. You guys have found some really, because I know this because you and I talked about it before we started recording, but found some really unique ways to take down and acquire deals right now. Can you walk us through some of those? Yeah,
I mean, a lot of our deals, one, sourcing the capital, and two, sourcing the actual deal comes from social media. We get about 1.5 million unique impressions across all platforms a month. And, you think TikTok is just like a bunch of, people dancing in their kitchen, but like some of those people are like legitimate buyers and sellers on that platform. Like they might not have a profile picture or have any posts, but we bought 2 deals off TikTok in the last 6 months, and we're going under contract on a 2-family waterfront development this week from a deal off Instagram. So the people are out there. We also source all our capital through social media. People see what we're doing. I'm not like, all of our posts are completely focused on real estate, and it's very clear the value that we drive. So that's a very obvious differentiator. It's not where we source all of our deals. Obviously we use REI SIF, which is a platform that stacks multiple lists. For example, it would, you pull a bunch of data and it would say, okay, this person is probate, pre-foreclosure, tax lien. We use PropStream, which is a data analytics software. We use Unlimited Mailing List, which is a very underutilized platform. I find a whole lot of people don't know about this. This is actually a telemarketing tool that sources bad credit. And if you have bad credit, you're used to getting called all the time by creditors. So we've sourced a lot of deals there. We hire a lot of people from the Philippines that cold call, text, email, things of that nature. So just having, our systems and operations set up.
Yeah, that's a lot of moving pieces. Like I want to rewind really, because you said 2 things. You're sourcing all your capital on social media, and you're also sourcing some of your deals off of social media.
Yeah.
What are you doing that is different? I mean, there's a lot of chatter, a lot of noise on social media. How are you standing out?
I think just presenting the deal and presenting the opportunity and actually showing like real returns. Like, hey, for example, we bought a deal 6 months ago. We got it under contract for $400,000. It appraised day of $700,000. We showed the appraisal report. It will grow. On Airbnb. It will gross $125,000 its first year in operation with all the capital being returned to our partners in year 2. So we just present the deals and the metrics, and people can see they're on Airbnb or they're on Zillow, and people are in tune with the renovation. So just showing them what is actually going on, user generated content.
Yeah, that's really, really cool. I'm trying to think if there's some other people out there that do something similar to it.
I'm sure there are. I'm surprised more people don't, but just like,
who am I
walking through with the construction workers and really just like immersing them in the process.
Yeah, it's I know who it is. I'm thinking of. It's Entrepreneurs on Fire. I can't remember his name at the moment, but if you ever looked up, they run another daily podcast. Right. Business focused, but every month they publish to a penny all their revenues. It's like, hey, here's all our affiliate revenue. Here's what we did on this front. Here's what we did on that front. Like, here's our book sales
as well. Yeah.
What now?
I think I've seen that.
Yeah. It's kind of crazy. At first, I was a little taken back. I'm like, gosh, man, like that's really pulling back the curtain on your business, especially, by the time. Yeah. And yet it's its own right. Here we are talking about it.
Right.
It's like, oh, right. That's exactly how that works. So you guys are out there, you're posting your deals, you're posting what those potential profits can be. How does that conversation work with potential investors? Because one thing just to share, hey, here's what we're doing, but how do people even then know to get in touch with you and say, hey, I want to be a part?
DM, email, phone call. Leads have come from a large variety of different places. It's obviously it's tricky with posting deals, and there's laws around syndications and things of that nature. So we want to be careful there. So if someone voices, we'll be like, hey, if you want to be a part of this deal, send us an email. We'll add us to the email list, and every time we have a raise, we'll just send out the deal. The money gets raised.
That's awesome. Awesome. What has been, I guess, one of the biggest challenges you have faced in growing your company?
I think putting people in the correct role to succeed, clearly defining what their scope of work is. When you just launch a company and you only have a few people, it's very difficult to have people do segmented things and delegating. But after that, after you have, 3 or 4, killers, then you can really, really scale. But just finding those original, 3 or 4 pieces that, make the company, there's 5 Power Rangers. We call each other the Power Rangers. So it's myself, our head of finance, shout out Mike, head of marketing, shout out Kiana, head of acquisition, shout out Aaron, and head of construction. And it took a long time to get all those people aligned and on the same page, but they're all extremely talented in their own right. And now it's, after that team was really formed, we've seen a lot of, exponential growth.
Did you bring these team members on as founding team members, or did they come on as employees? How did you scale with the people?
Contractors, and then we'll get pieces of deals.
Okay.
Yeah. Yep.
Got it. No, that's really, really cool. So you guys are working on a combination of single family and multifamily. Are you still wholesaling deals as well?
We'll wholesale like 1 out of 5 deals just for short-term cash flow.
Right.
But our primary focus is acquisitions. And again, we get these deals so much below market value that it's very easy to raise money on these transactions.
Right. Where do you see risk right now in the market?
Where's the risk in the market? I think people being over leveraged. I think people taking out too much leverage on their deals, people taking out interest rates that are too high. What else could there be? I think those are the 2 biggest things that I see people running into right now.
I'm sorry.
People ask us, they're like, oh, are you worried about the market going down? I'm like, I know the market's going to go down. That's natural. But fortunately, the golden rule of all of this, or everything we're talking about, is like buy well and everything else will figure itself out.
Right. Absolutely. Is there an asset class that you guys are favoring at the moment, or a particular type of investment that you guys say, man, that's really the thing that we're hunting for?
Honestly, man, it's like we're not to your scale yet. So it's like we're just looking for unsophisticated single family and multifamily owners. Like we want to build our portfolio on assets way below market value, 30, 40%. And then when we reach more scale and we're a little bit larger, then maybe we go for the multifamily where maybe they're 10 to 15% below market value. But right now we just want to get insane screaming deals. And after we build our footprint, then, we get a little bit more conservative.
Got it. Tell me this. What are you finding when you're looking for a multifamily deal? Is there a unit size? Is there a particular, I know again, you're looking for stuff below market, 30 to 40% below market,
Yeah.
but is there I'm not sure the right word to look, but what are the metrics that surround a multifamily deal that you can still acquire in today's market, 30 to 40% below market value?
We operate in New York, so the tenant rights and are very, very strict. So we really look at tenant profile. What type of people are living in there. Look at the T12. Make sure see who's paying, who's not. That's obviously very important. Price per square foot is a huge deal. A lot of these landlords, so the market we operate in is about 2 hours from New York City. So the developers up there aren't the New York City savvy investors, so they don't really know how to maximize square footage. So we want to make sure that we can drive value by adding a bedroom or a certain amount of capital expenditures. We just want to make sure that there's a very clear value add component with us acquiring a deal.
Gotcha. Is there a particular unit size where you say, hey, everything under 40 units we can find, that we can find where we can buy stuff under market value? Or is it you're buying everything up to 100 unit properties that you still just get a screaming deal on?
Obviously the higher you go up in value, the more sophisticated the buyers can be. But we did a deal actually that I brokered about 6 months ago. It was a 24 unit that we brokered for 2.35 million. And the buyers got seller finance and all the rents were probably 25% below market value. So there's still those opportunities there.
That's crazy. That's crazy. I mean, because you hear stuff like this, and for a lot of people we've seen that have even come on this show, if they're not going out and duking it out with the institutional players, they're going down in size in order to grow their portfolios more quickly, which is kind of counterintuitive. But they're going, hey, you know what? I'm looking at anything under 50 units. Like over that, I'm not fighting for it.
And I've heard that a lot too. They'll do that, and then once you acquire enough of those small units, you do a private equity roll up, and then you can sell it to one of those big guys.
Right.
So,
right.
Yeah.
And that's really, really cool. You said in 5 years you want to be at 100 million, or was that by 2025?
2025.
By 2025, and you guys are at 10 million in assets under management right now, and you've done that in a little under 2 years.
Yeah, exactly. Yep.
Man, that's really, really cool. What would you say to somebody maybe in your shoes, rewind a couple years? What would you tell yourself to do differently that maybe would speed up the process or avoid a major mistake?
I would just say find an incredible deal. Be a wholesaler. I started off as an agent, but start off as a wholesaler, find an incredible deal. If you don't have the money to operate it, call the top operators in your market. Hey, can I be involved in this deal? You can have it below market value. Just give me some equity on the deal.
Yeah, that's a great
and learn that way, and just learn from people that are doing what you want to do.
Man, that's awesome. That's absolutely fantastic. Evan, thank you for taking the time to come on the show today and really share with us a lot of unique strategies. I don't think I've heard anybody come on the show. I don't know what episode this will be, probably they'll be north of 650, but nobody's come on yet and told me that they've scored at least 2 deals off of TikTok in the last 6 months. So well done. Right. And I absolutely love it. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
You can email me at evan@lvlgroupnewyork, that's ny.com, or Instagram is Bowery Boy, spelled like Soldier Boy, BOI.
Awesome, man. Appreciate it, Evan. We'll make sure we put that there in the show notes. Thank you so much. Have a great rest of your day.
All right, Sam. Thanks, man. Peace.